It's a Top That Trade Day. In one corner of your screen, we have Alan Nuckman of Agora Financial, and in the other, Phil Flynn, a Fox Business News Network contributor, here to go with us for a few rounds. Round number one, flag formation. The NDX, which is really a reflection of the NASDAQ, has stalled between 10,000 and 11,000. What's in store for the alleged tech takeoff?
Well, it's stalled. It's just stopped going higher. Not to say that this is a top, but we're in a very strong trend. We'll see what the earnings say for those big companies, but you've got to still be impressed by what tech has done over the course of this year. And I would say it's real premature to say it's over. You're seeing a little bit of a rotation into some value stocks out of those hot money tech plays.
It may not be over, but there are a lot of technical signs that maybe this market's getting a little bit tired. And sometimes if you have an incredible run, you should come back down a bit. One of the things we saw on a chart, that old key reversal where you make a higher high and then you reverse and close below the low and the moving average, that happened in tech. And I agree. Listen, tech's not going away, but if you're trading this market, when you see a signal like that, it might be a good time to book at least some of your profits and maybe wait for a bit of a pullback to buy back in.
So what you're saying is if it's tired, maybe take a rest. Good call.
Yeah, or take profits because profits are good.
Round number two, old gold. New forever highs were made this week. Goldman Sachs now raising the target to 2,300. Is that possible or probable in your book?
Goldman Sachs, what about Business First? What about Business First? We called $2,000 an ounce months ago. I think Alan was in on me on that call. We're calling for $2,000 an ounce. We got there. Why ask Goldman Sachs? But you know what? Look at what's behind this gold rally. We're seeing trillions of dollars of stimulus around the globe. And the people who are buying gold are not just your gold bugs. You have insurance funds. You have pension funds, private wealth managers, people that are seeing the value of gold as a hedge.
All right, let me say something here. Now, even though we made new highs this week, they're really not new highs because if you adjust the previous highs for inflation, we'd still have to get to $2,200. So we're still got some upside. And the number I was looking at was $3,000. If you look at the big picture, a cup and handle pattern, and for me, it's all about the charts. So we still have more upside with this dollar decline. Gold has been go, go, gold.
Yeah, we agree with you. I mean, we've been talking about gold for a long time. I say 3,002. We were saying 2,000 this year, and we made that call in the beginning of the year. So it's been a pretty good call.
I agree with you, Phil. You guys have made some awesome calls on our show. Round number three, gap attack. Price gaps on charts getting filled are very important to some technicians. Explain what you look for.
Well, I'm a technician. I'm a chart guy. I'm a price guy. And that's what I follow because my belief is everything's reflected in the price. Now, looking at the charts, which I do, I've got a focus on those gaps on the thought that eventually, and let me say that again, eventually gaps get filled. So there's a gap way up above in the S&P from February, 19th to the 21st to the 24th, when the market went straight down after that. So that could get filled eventually. And there's also a gap in the VIX down below between $18 and $22. So if the VIX goes down, that should mean that the stock market's going up eventually. So we'll see how long it takes.
Yeah, gaps are meant to be filled. That's an old saying in the trade game, right? And it looks like this one has a very good chance to get filled, and maybe fairly quickly. The big question you have as an investor is what happens after the gap gets filled, and that's what makes it tough. The gap part is an easy call, right? Hey, it's going to get filled at some point. Stick with it. But when you fill that gap, sometimes it can be a top. And sometimes it could be a consolidation area for a new leg higher. So once you get to the gap, it's always a good idea maybe to pull back, pull in your horns a little bit, and see what happens next. But it's always a good target where you can look to take profits.
On to the bonus round question for today. And the last time you were on the show, you talked about the coin shortage crisis. Well, for your bonus round question, can you name the fast food chain that recently in Virginia offered free food in exchange for $10 in rolled coins?
Virginia? It's got by Popeyes, right?
What am I focused on? Every week I bring up this protein. It's easy. It's an easy one for you. Chicken, my friend. Chick-fil-A.
Alan, you win. Winner, winner, Chick-fil-A dinner.
The city ran out of the wraps to put the coins in. Nobody could bring them in. They couldn't bring in. No one had the wraps to put the coins in. And I don't think they have a coin machine inside the Chick-fil-A to like flip all those coins and figure out how much you had. So it was a good idea, but not enough people could execute on it.
Well, thanks as always, Alan, for keeping us up to date on chicken news. Business First AM returns.